Welcome back. We are watching oil prices this morning back down to 65.13 right now. Crude is under pressure, down about 1% amid increased Russian production and U.S. drilling. Geopolitical tensions also flaring up ahead of OPEC's June 22nd meeting. Joining us now to weigh in is Stephen Schork. He is the publisher of the Schork Report. Stephen, it's good to see you.
Good to be here, Maria. Thank you.
Let's look at the OPEC meeting coming up, a couple of weeks. What are you expecting?
I expect a lot of contention and just what we've seen essentially over the weekend. And as Justin Trudeau has unfortunately learned, you simply don't poke the bear at this point, given the leadership in this country. So that said, and I think, Maria, the last time I was on, we were estimating there was about $6 to $7 of a geopolitical risk premium priced into crude oil. Since then, the market has come off about $6, $7. So we're now migrating into an area that is supportive of price. I do think this is an area, if you're a technical or quantitative trader, you're kind of pressing the elasticity. Price has to hold at this level. So that said, I think we're looking at a situation where prices got a little bit too high. We've migrated into a more palatable level at this point. And as far as OPEC is concerned, there was a concern with Brent crude oil trading above $80 a barrel and the U.S. barrel here trading above $70 a barrel with regard to market share. There's just so high you can push prices without pushing demand, given that we have substitutes in the market away. So now that prices have pulled back, I think you're starting to see some slippage here. I think we've seen some hints from the Saudis that they are willing to put oil out onto the market.
Right. Well, that's what I was going to ask you about, because the Saudis say, look, we're going to be producing more oil, but Iraq's oil minister is warning that unilateral decisions on oil output could constitute a breach of OPEC. So is that a warning directed right at the Saudis and their decision to ramp up?
I think it is, but and again, referenced before, why did we have that $6, $7 rise in oil prices? Essentially, this is not your grandfather's OPEC. We've never seen the chasm between the Sunni side of OPEC, Saudi Arabia, and the Shia side, Iran, as wide as it is right now. So, yes, it could constitute a breach. But again, when we look at where supply is and where demand is, right now demand for crude oil has never been stronger. Demand, regardless of it, we're above $3 a gallon here in the United States. Demand for gasoline has never been stronger. Strong economies lift commodity prices. So there is demand in the world, and regardless of sticking to this supply quota, it would behoove Saudi Arabia and the Iraqis, for that matter, to continue to put oil out in the market. And given that Saudi Arabia has been the one over the last 2.5 years, have done the heavy lifting as far as sacrificing market share to prop up oil prices, I don't think Iraq is in any sort of position to send a signal to Saudi Arabia.
All right, we will leave it there. Stephen, it's good to see you this morning. Thanks so much.
Thank you, Maria.
Stephen Schork joining us there.